Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Today our group will present the project 1, the risky assets of three stocks, which are Facebook, Mastercard and Microsoft. We choose the stocks from 2015 until 2019 historical data. My name is AFIQAH binti Abdul Haris. Okay, first and foremost, Facebook. Facebook is computer services industry under sector of technology. It focuses on building products that enables people to connect and share through mobile devices, personal computer and other services. Next, for the Mastercard, is a consumer financial services in financial sector. Mastercard Incorporated is a technology company that connects consumer, financial institutions, merchants, government and business across the world, enabling them to use electronic form of payment. And lastly, for the Microsoft is software and programming industry under sector of technology. Microsoft Corporation is the company that develops, license and support a range of software, products, services and devices. Okay, for project 1, the method being used is we need to find the daily return and daily log return. For daily return, we use the formula. We need to minus the price of today with price of yesterday, and then the result we divide with the price of yesterday. For the daily log return, the formula is the ln of price today over with the price of yesterday. Okay, then we need to find the daily return and daily log return throughout the year. Afterwards, then we can calculate the annual return and annual log return for each year. For annual return, the formula we use is the average of the daily return throughout the year, and then we times with the number of trading days in a year. Number of trading days in a year is that means we need to calculate the number of trading days for each year from 2015 until 2019. Okay, for the annual log return, the formula is the average of the daily log return throughout the year times with the number of trading days for each year. Okay, so the next question, we need to find the standard deviation. For standard deviation, it is divided into two. Firstly, standard deviation for annual return and then standard deviation for log return. For standard deviation for annual return and log return, actually the steps are the same. Firstly, we need to find the standard deviation for daily, and the formula is the standard deviation of population of the daily return throughout the year. And then for the variance, we just need 2 power of the 2, the result we get for the standard deviation daily, and then number of trading days in a year for each year. And for annualized variance, the formula is we just need to multiply the daily variance with the number of trading days in a year. When lastly, the standard deviation for annual return, we just need to square root the result we get for annualized variance. Okay, this will be continue for every year. And then for the standard deviation for log return is the same. The difference in the standard deviation daily, which we need to use the result of standard deviation population of the daily log return. And the other is the same step like before.
My name is NURADLINA binti IDRUS. I would like to explain about annual return, annual logarithm return, annual standard deviation for Facebook. First, I would like to explain about annual return for 2019 throughout the year until 2019. For 2015, annual return has 32.12, while 2016 it has 13.37, 2017 it has 44.25, and 2018 negative 22.25, and the highest among the year for annual return is 2019. It has 48.71, while annual logarithm return for 2015 it has 28.83, 2016 it has 9.46, and 2017 it has 42.77, while 2018 it has the lowest annual logarithm return, negative 29.72, while 2019 it has the highest annual logarithm return, which is 44.83. And annual standard deviation for 2015 and until 2019, standard deviation for annual return, it has 35.62, and for logarithm return is also the same for 2015. And 2016 it has annual return has the highest between the logarithm return. It has 27.79, while 2017 it not have much difference, which is the difference by 0.02 for standard deviation for annual return and standard deviation for logarithm return. And for 2018, it has 37.90 for annual return and 39 for standard deviation for logarithm return. And 2019, it has 27.82 for standard deviation for annual return, while standard deviation for logarithm return, it has 27.65. The observation for Facebook is annual return indicates performance of the company throughout the year. An annual or annualized return is a measure of how much an investment has increased on average each year during a specific time period. As we can see, every company gained highest return in 2019. This is because of the stock market's gain in 2019 can be attributed to a dramatic policy shift at the Federal Reserve. The lot return is less useful for comparing our investment with other investments that have a fixed interest rate, such as bank savings account, because they are normally quoted as a yearly compounded interest rate, and the lot return is a continuously compounded rate. Because the formula for lot return takes the duration of the investment into account, it can be used to compare multiple investments that cover different length of time. Typically, we would compare multiple investments using an annual rate. So, T in the above formula will be the number of years. The standard deviation is a measure of how spread out of the prices or return of an asset are on average. It is the most widely used risk indicator in the field of investing and finance. Standard deviation is commonly used to measure confidence in statistical conclusions regarding certain equity instruments or portfolios of equities. A large standard deviation usually indicates that the data points are far from the mean, and a small standard deviation indicates that they are clustered closely around the mean.
Hi, my name is AFIFAH binti Muhammad FAKHRUDDIN. Now, I will explain on the results of Mastercard stocks. For annual return, 2019 showed the highest return, which is 48.24, while 2016 showed the lowest return, which is 8.05. 2015, 2017, and also 2018 have annual return which are between the lowest and the highest. Next, for annual lot return, 2015 gives 20.78%, 2016 5.87%, 2017 38.25%, 2018 22.02%, 2019 47.25%. We can see here that for annual lot return, the highest lot return is in year 2019, same as the annual return before. Alright, for annual standard deviation, 2018 has the highest standard deviation, which indicates these stocks are the riskiest among other years, and 2017 shows the lowest value of standard deviation. For 2015, 2016, and 2019, the results of annual standard deviation are quite similar, which are 20.82%, 20.88%, and 21.30% respectively for standard deviation for annual return. So, what we can observe from Mastercard stock is it gains the highest return in 2019. This shows that the investment on Mastercard stock has increased the most on average in 2019. The company has been on acquisition spree in 2019 to augment its technological capabilities across multiple product categories. In 2016, Mastercard gained the lowest return, which shows that the investment on Mastercard stock has decreased significantly compared to the previous years. Lower impairment charges and higher investment income in 2016 that were partially offset by higher interest expense from debt issued in 2015 and 2016. In addition, we can observe that in 2018, Mastercard has the highest annualized standard deviation. This shows that there have been a large swing in the return for the year of 2018. Meanwhile, 2017 presented the lowest annualized standard deviation compared to other years. The result shows that the Mastercard continues to benefit from the secular shift from cash to electronic forms of payment. Mastercard has consistently grown revenue and earnings over the last decade, which speaks to the company's long-term growth runway. The investor had been reminded that there could be some near-term disruptions given the trade wars and everything going on in the macroeconomic environment currently. However, management continues to see overall healthy trends in the business.
My name is NURUL. I would like to present the result for annual return, annual logarithmic return, and annual standard deviation for Microsoft Corporation. Annual return for Microsoft from 2015 to 2019 are 21.05, 13.91, 33.06, 21.15, and 46.0 respectively. From 2015 until 2019, the annual logarithmic return for Microsoft are 17.10, 11.34, 31.96, 17.18, and 43.99 respectively. As for annual standard deviation, there is slightly difference between standard deviation for annual return and standard deviation for logarithmic return. And for 2019, the standard deviation for both annual return and annual logarithmic return are same, which is 19.85. From the result, we observe that Microsoft gains the highest return in 2019. This shows that the investment on Microsoft stock has increased the most on average in 2019. This is because the stock's performance can be chalked up to a combination of stellar earnings growth and an increase in the price to earnings (PE) ratio. That extra valuation premium boosted the stock's performance too. In 2016, Microsoft gained the lowest return, which shows that the investment on Microsoft stock has decreased significantly compared to the previous years. A weak quarterly report in April that showcased bumpiness of Microsoft's cloud transition is partially to blame, as is Microsoft's plan to acquire LinkedIn. Microsoft missed analyst estimates for earnings and posted a year-over-year decline in revenue for its fiscal third quarter. In addition, we can observe that in 2015, Microsoft has the highest annualized standard deviation. This shows that there have been a large swings in the return for the year of 2015. They provide incremental analytics firepower to upsell and cross-sell products. Meanwhile, 2017 presents the lowest annualized standard deviation compared to other years. Microsoft Corp's MSFT stock has held up relatively well amid a broad market sell-off, dropping 12% off its high, while other megatech stocks have suffered far more dramatic declines, but they may be of little solace to investors.
Hi, my name is IZZAH binti AZHAR. Now, for the conclusion that can be made from Project 1 is annual return indicate performance of the company throughout the year. An annual or annualized return is a measure of how much an investment has increased on average each year during a specific time period. As we can see, every company gained highest return in 2019. This is because much of the stock market's gain in 2019 can be attributed to a dramatic policy shift at the Federal Reserve. The log return is less useful for comparing our investment with other investments that have a fixed interest rate, so as bank saving accounts, because these are normally quoted as a yearly compounded interest rate, and the log return is a continuously compounded rate. Because the formula for log return takes the duration of investment into account, it can be used to compare multiple investments that cover the different length of time. Typically, we would compare multiple investments using an annual rate. So T in the above formula will be the number of years. The standard deviation is a measure of how spread out the prices or return of an asset are on average. It is the most widely used risk indicator in the field of investing and finance. Standard deviation is commonly used to measure how confident in statistical conclusions regarding certain equity instruments or portfolios of equities. A large standard deviation usually indicates that the data points are far from the mean, and small standard deviation indicate that they clustered closely around the mean. We can conclude that the standard deviation for each company is different because they use their own strategy to manage their stock or market. This is due to lack of people interest, and preference also affected the demand of the stock. That's all for my group. Thank you.